Hello everyone, welcome back to my YouTube channel Later Work CMA. So in this video, we're gonna study some of the important cost accounting terms that every business student and professional should know. Let's get into it. First one is cost. Let's start with the basic term cost. Cost is the total sacrifice, whether it's actual money spent or an estimated value, to produce a product or service. It includes everything: direct, indirect, fixed, and variable. The second one is historical cost. Historical cost refers to the cost that's already been incurred in the past. It's helpful for analysis and reporting, but usually not relevant for future decision making. The third one is out of pocket cost. An out of pocket cost is one that involves actual cash payment. For example, paying for raw materials today, that's an out of pocket expense. Fourth one is economic cost. Economic cost is explicit cost, that is actual money spent plus implicit cost, that is like lost opportunities. Think of it as a total cost of choosing one option over another. Fifth one is sunk cost. Sunk cost is money already spent and cannot be recovered. It shouldn't influence future decisions. Classic example: that non-refundable deposit you already paid is the best example for sunk cost. Then the sixth one is imputed cost. Imputed cost is a non-cash hypothetical cost, like the rent of your own building. If you don't rent out it, you still consider the cost for accounting process. Seventh one is relevant cost. A relevant cost is any cost that will change depending on your decision. These are the only costs that truly matter when you are making choices. Next one is controllable and non-controllable cost. Controllable cost is a cost that a manager can influence. For example, department level expenses. Uncontrollable costs are those by top management or external forces, like tax rates or regulatory fees. Our next type of cost is avoidable and non-avoidable cost. Avoidable cost can be eliminated if an activity stops. Unavoidable cost will be incurred regardless of the decision. Next one is cost object. Anything for which you want to measure cost: a product, service, job, customer, or even a department. Next one is cost unit. A cost unit is the standard unit of output, like per brick, per ton, or per service hour. Next topic is composite cost unit. When a single measure isn't enough, we use a composite unit. For example, ton kilometers for transport or patient days in hospitals. Next one is cost center. A cost center is a location, person, or machine where costs are collected. For example, the assembly department in a factory. The next topic is responsibility center. This is a segment of the company where a manager is accountable for costs, revenues, or profit. These can be cost centers, profit centers, and investment centers. The next topic is cost of production. This is the total cost to produce goods or service, including direct materials, direct labor, and production overheads before selling expenses. Next one is conversion cost. Conversion cost is the addition or the total of direct labor and production overheads. Basically, the cost to convert raw materials into finished goods is what about conversion cost. Next one is cost apportionment. Cost apportionment is used when cost benefits multiple cost centers, like dividing electricity cost based on machine, hours, or floor area. Next topic is cost absorption. This is the process of charging overheads to cost units like products, giving us the total cost of each unit. The next topic is under or over absorption of overheads. Under absorption, you charged less overhead than you actually spent. On the other hand, over absorption, you charged more overhead than that was really incurred. This usually happens due to estimating overheads in advance and needs adjustments. So, we are moving on to the next topic or the next sub-chapter, that is elements of cost. First one, in simple terms, cost is the total amount spent to produce a good or service, and this cost is made up of three main elements. Let's see what are the three main elements of cost. First one is material cost, second one labor cost, and third one expenses or overheads. Let's look at each one in detail. Material cost. Material refers to the physical items used in production like raw materials, components, etc. It is divided into two parts, direct material and indirect material. Direct materials are materials that form part of the final product. Example, we can say wood used for making furniture, fabric used for garments. Next one is indirect material. Materials used in the process but not directly part of the product is known as indirect material. Example, lubricants for machines, cleaning supplies. And for a tip, I'll tell one thing. If it ends up in the product, it's direct, and if it helps the process, it's indirect. The second element is labor cost. Labor cost is the money paid for human effort in production. Wages paid to workers directly involved in the making of the product is called direct labor. Example, machine operators, welders, assembly line workers. Second one is indirect labor. Wages paid to people who support production but don't directly make the product. Example, supervisors, quality inspectors, maintenance staff, etc. Okay, I will give you a quick note. Think of direct labor as the hands-on workers and indirect labor as the behind-the-scene helpers. The third element is expenses or overheads. These are all the costs other than the material and labor cost that are required to produce a product or service. And there is direct expenses and indirect expenses. Direct expenses are also called chargeable expenses, which is directly linked to a specific job or product. Example, cost of special tools, hiring a machine for a specific job. Indirect expenses are general businesses costs not linked to one product. That is, example, we can say rent, insurance, depreciation, etc.